So in the next slide here, we're going to get into who is eligible. I just mentioned for a HECM reverse mortgage, you have to be at least 62 plus years old. Now, when I say you have to, I mean at least one borrower. Very often today, borrowers are a couple, usually married. So in that case, we have to have at least one borrower that's 62 years old or older. What does that mean as to the other partner, the spouse, the other borrower? They don't have to be 62 years old or older. They can be younger. But the important point to understand is that if one of the borrowers in a two borrower situation, again, typically a married couple, the amount of loan that you can get is going to be dependent on the age of the youngest borrower. So now you can have a borrower who's over 62, sometimes well over 62, and then a borrower who's under 62, maybe several years under 62. The two of them together can still get that reverse mortgage. They'll both be on the loan, but because the loan amount is based on the age of the younger borrower, it's going to affect how much that you can get for that loan. So just keep that in mind as to the eligibility for a reverse mortgage. The other thing I would want to point out is you have to own your home, obviously. It has to be your primary residence. They have to have at least 50% equity. I would say preferably more. And again, I'll come back to that a little bit later as to why that's the case. So a lot of times folks think they can get a reverse mortgage up to 70, 80, 90% of their value. That's just not true. That's really not how they work. Property types can include single family residence, multifamilies, and condos. And there is a financial assessment that is going to be done as part of getting the loan, but it's more about residual income analysis. Your FICO score doesn't really matter. There's no debt to income ratio requirement, and there's no reserves required. So understand that the point of the financial assessment is to establish eligibility, not based on the dreaded, minimum credit score or debt to income ratio. It's more about residual income. So that's a key point to understand when it comes to a HECM reverse mortgage.